Yo, 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 yo! What's going on? How's everybody doing? Hey, Timmy, what's up, baby? What's everybody else doing? Rock and roll. Hey, Pragnesh. All right, cool. Let's get to work here. We got a lot of things to do. We got a little bit of a gap down at the open today. Nothing too crazy. It's just kind of taking us back down to that 200-day moving average. We're frankly just in a congestion zone where the market is kind of digesting this move. We've had like 6-7 days of consolidation right at that 200 SMA, which is a sweet spot. Even with a little bit of a gap down, it doesn't break us under support. Remember to really, like, a lot of times, you know, we have like a recency bias. You know, we saw like the big move down in January and everybody, right, wants the market to collapse again, but it takes work. You know, I expect this year to be a little bit of a range year. So, you know, at some point, of course, we'll probably come back down a little bit. Markets do have that kind of ebb and flow. But before that happens, what you need to see is on shorter term time frames, a shift in structure and a shift, of course, in sentiment as you start to see things roll over. So, you know, even though we're gapping down, really until we start closing under the 9 EMA and start breaking some levels of support, I just give a benefit of the doubt to whatever it is that the trend is that I'm seeing. That way, you know, I'm trading with the trends. And frankly, in a strong market, I'd rather play a gap down day for long than a gap up day where it takes out a lot of the range. And so I love on a bull market run like we've had the last month, a gap down day, because you can go red to green on a lot of stocks and, you know, hit them with a lot more range. Then, you know, some days the market gaps up like 200 points and you're just left like, right, holding your D all day, which is nice. But, right, we only like to do that for like 5-10 minutes max, right? We don't want all day to do that shit. So now, this thing is coming down. You've got right down to 275. I think that this one should have some juice on it also. We've got just a little bit of gap down, but we got more layers of support on the S&P, and so we're not really even giving up like a day's worth of gains on this gap down. So I'm not seeing much. I'm not seeing much into it just yet. I think that, you know, today we're going to try to, you know, we'll watch for the red to greens on some of our watch list names. If we get red to green on them, we can go all systems as a go. Let's keep a focus list today since it's Monday. We got OSTK on watch here for this range break. It does trade a little bit thin like PYX, so you got to be careful. On a stock like OSTK, you can't chase it up, and you can't ever really buy it on the ask, at least not your full position. You've got to either level in or make sure you're hitting it on dips and scooping them up, because with the spread, if you buy on the ask, you end up getting smoked out, and, you know, that's not that fun except on, you know, Fridays and Saturdays. So watch this one for that range break as long as it holds, but we need to make sure we don't chase it. OSTK, a lot of times, is associated with cryptocurrency stocks and Bitcoin stocks. Bitcoin was going on a big run this weekend, Friday, Saturday, Sunday. You know, we were trading in the crypto room, Ethereum, EOS, like all sorts of shitty coins that have been dead forever, and they were all ramping like 15-20%. A lot of times when crypto runs, OSTK tends to be hot. OSTK can really run when crypto runs. So keep an eye out on this, especially if you start to see like another push in Bitcoin. What you'll start to see is, you know, you can start to get a little action on something like this. So just kind of keep an eye on it. Don't chase it. But this is probably my favorite for today. I got WTW. You got a bear flag over here. Gapping down on, you know, some type of news over here. TC1000 isn't listed for some reason. It's right at pre-market lows. You know, this thing is giving it all back, right? You know, Oprah took this thing and rode it up to 100 and probably dumped out of it at this point. But But now you're getting breaking down these lows over here. If you look at a weekly chart too, you're breaking right under the 200 SMA, which is important for like longer term traders, longer term investors. So, you know, when you break that kind of key level, you can add a lot of sell pressure, especially if your daily, your weekly, and of course your intraday are aligning. You might be able to get a good play. One thing to be mindful of is a stock like WTW, you may get a gap down in a quick shred at the open, and then it may squeeze up later in the day. Right now, a lot of the gap down plays, I'm working on changing around the strategy a little bit. I was peeking at it on the weekend. A lot of the gap down plays, especially the ones that get hit with SSR at some point, they start after like the first hour, they start to squeeze higher. You guys remember Grub? Shop did it 2 days ago. So this is something you want to be mindful of. This is a slight change to our strategy that we've used for years, right? For years, you know, we'd see a gap down, right? And we want to take this thing short. But what we have been noticing is, you know, after that initial, and you usually get like an ORB on the 1 minute time frame. And then if it doesn't follow through, you've got to be ready for the squeeze higher. And then a lot of times they dip down to the VWAP and they just bust loose. We saw this with Grub. I saw this with Shop. We've seen this with a lot of plays. And so when you have like some of you guys like Mr. Craig, Cody that have been with me for years, you know, we're always trying to short those type of plays. Just be mindful not to wear out your welcome on the gap down. After the first 30 minutes, maybe hour, you cut them and start looking at them for the potential long side. But don't get too dicey with it just yet. Let me kind of fine tune the strategy on it. We can go over it tomorrow. I still got a little work to do on it. ICPT, this one's actually got a nice push on it. You know, you're busting out this resistance level. If you look at its weekly chart, you can see here that, you know, you don't have like any level of resistance back up until the late 2016, which is good. The caveat on this is going to be, I don't like when this happens. When you have like a huge push pre-market, like the first 5-10 minutes, and then you fade off the rest of pre-market, it adds a level of kind of hidden resistance. You know, I don't use pre-market data on my charts because it makes the moving averages look weird. It adds that hidden level of resistance that you have to trade around. So if I see a stock that moves like this, where there's going to be a level of supply from pre-market, what I'll do is have two types of charts up. I'll have my chart with the gap up, and then I just started doing this about a couple weeks ago. I'll add in a chart with the pre-market data just so I can remember where the levels are. That way I don't get shaken out by some type of booby trap or something like that. What's up, Clouton? Como estas? Wait, that's not even Brazilian, is it? Shit. How do you say hello in Portuguese? What's going on? Well, Clayton doesn't sound as cool as Clouton. That's a white boy name. All right, cool. RDFN. I do got RDFN on the watch list. These IPO stocks have been pretty hot. You got a kind of multi-test breakout over here and a break over the 200 SMA. This has got a nice push. See the volume pop on this thing? About 3 times its normal average. What you want to see is expanding volume, right? High relative volume on the days that they move. I think this one may have a little bit of a juice. Hopefully with the gap down, you'll get a weak open, and then you'll go red to green on this thing. Time to add the Nugget and J-Nug to the list, guys. We haven't whipped these things out in a long time, but for those of you guys that have been with me forever, you know that we love the J-Nug and Nugget our way to the bank. We just haven't had any opportunity to do it. You got a nice trend line break over here, a little bit of a gap up. Nugget is, you don't want to chase Nugget at the open though. Nugget works really well on big dips. Watch a 9 EMA, 20 EMA pullback at the open. Don't chase it higher, but if it does, and then that trend starts to set and it holds over the VWAP, watch it. You may be able to get something that, you know, where you get a nice rip and ride, slip and slide, where you start to really just kind of participate in the trend and let it ride. J-Nug, same type of deal. You got a nice kind of trend line break over here. The liquidity on these things is really good too. You got 10.6 million shares. Now, gold isn't always the easiest thing to trade, but if you look at kind of gold miners in general, right? You've got a nice kind of flag breakout over here, and so you're getting, really you're starting to approach. You're starting to approach some trend line resistance that, we haven't seen for a while, at least for a few years. So we're getting into that range where, we don't know for sure yet. I think the GDX can get to 24. How it reacts once it gets there, nobody knows. But right now we got on a short-term pattern, a nice flag. You got 9 EMA curls for the girls right up under that kitchen. So you got all the fun stuff that you need. You got a lot of liquidity in this thing too. The key on JNUG and Nugget always has been, don't chase it at the open. Let it pull back. Let it hold at its EMAs above its VWAP. Let the trend set and then participate. Remember, there's no hurry in the market, right? If in this type of market, we've been getting a lot of trenders. And so you can come in, even if you don't catch it like that first minute, you can come in and participate a little bit later. And then add this ACAD. We got 1 test, 2 tests, 3 tests, 4 tests, 5 tests, 6 tests of this 23, 20-ish level. This has got a nice flat top breakout on it. You saw the range on Friday, from 2190 to 2350. When you get a good range like that, you're able to trade much easier, right? We want to find stocks that have range where we can shift in and out and participate, right? It doesn't necessarily always matter the percentages, because if a stock moves 5% but its range is 10 cents, you can't trade around it, right? But if a stock moves 6, 7, 8% and the range is dollars, then you can trade around it, because even if you have a smaller account, you're trading 200, 300 shares. If a stock is moving around dollars, you can trade the ebb and flow in it and make money. But if you move like 5, 10 cents, you're not going to be able to get that, right? We need to be in the business of being able to make dollars or points versus pennies. So those are my favorites for today. I would add in, that goes with ACAD, I would add in this Labu. You've got kind of a 3-test breakout over here. This thing's got pretty good range too. In a pinch, if I had to trade between Labu and ACAD, because they're both the same sector, I find Labu has a little bit better liquidity and has a little bit better range. So, you don't want to be in both at the same time, because they're, Labu is an ETF for biotechs and ACAD is a biotech. So in general, just kind of be mindful of those. So those are my faves for today. Really watch this OSTK. I think at some point this thing could cook, but only if it gets a really good setup, and I won't chase this thing higher. All right? So friends, it's Monday. You know what we got to do. Let's go out and have a little fun. If you guys are enjoying these YouTubes, give me a thumbs up and a holler. Leave me a little comment. Tell me that I'm sexy. That'll be very nice. Like I got a nice set of hair, something like that. That would be very good. Let's go do what we do.